Tuesday was a dismal first trading day of 2023 for Wall Street, only days after it closed the books on its worst year since 2008. Stocks gave up an early gain and ended down. The S&P 500 lost its 1% gain and ended the day down 0.4%. Less than 0.1% of the Dow Jones Industrial Average and 0.8% of the Nasdaq Composite were down. Small company stocks also fell, causing the Russell 2000 index to decline by 0.6%. One of the largest weights on the market was represented by technology stocks. For the first time since March 8, 2021, Apple's market worth dipped below $2 trillion after a 3.7% decline. The iPhone manufacturer's stock experienced its first annual decrease in 4 years in 2022, dropping roughly 27%, along with the rest of the technology sector's stocks. The benchmark S&P 500 fell over 20% for the year, just its third annual fall since the financial crisis 14 years ago, as investors began the new year with the same worries that dragged on markets in 2022. According to Randy Frederick, Managing Director of Trading and Derivatives at Charles Schwab, everything are on sale, 20% off, with the market down 20%. If individuals are long-term oriented, you'd think they would be willing to come in and buy a little bit. It's a little harder in the short run. On Wednesday, the Fed will release the minutes from its December policy meeting, potentially providing investors with more information about the Fed's decision-making process and outlook until 2023. On February 1, the central bank will make the following interest rate policy decision. After skyrocketing from a range of 0% to 0.25% at the beginning of 2022, the Fed's benchmark lending rate now ranges from 4.25% to 4.5%. The U.S. Central Bank does not currently foresee a rate cut until 2024, but predicts that it will reach a range of 5% to 5.25% by the end of 2023. On Wednesday, the government will release a report on job vacancies for November, and on Thursday, it will release a weekly report on unemployment. On Friday, the more comprehensive and anticipated monthly report on employment for December will be made public. According to Frederick, if we get a weak report, it would be good for the market because it might suggest that the Fed will ease back a little on the rate hikes. The most recent wave of corporate earnings reports, which will begin pouring in significantly around the middle of January, are also on Wall Street's radar. According to FactSet's poll of analysts, earnings for S&P 500 businesses will likely decline in the fourth quarter and hold steady throughout the first half of 2023. To lead a surge in communications services equities, Facebook parent company Meta Platforms increased 3.7%. Gains in a number of large banks and other financial firms also contributed to minimizing the market's losses. Wells Fargo saw a 1.2% gain. Tesla experienced a 12.2% fall, the largest among S&P 500 stocks, as investors were disappointed by the electric vehicle manufacturer's sales projections for 2022. The S&P 500's largest gainer among gold producers, Newmont, increased by 5% as the price of the precious metal increased. The S&P 500 dropped 15.36 points overall to 3,824.14. To 33,136.37, the Dow dropped 10.88 points. To 10,386.98, the Nasdaq dropped 79.50 points. To reach 1,750.73, the Russell 2000 dropped 10.51 points. Markets in Asia and Europe expanded.